While the US dollar hasn't really dropped below the 200-day moving average, gold on Friday gave us a monster candle over here, big green candle. That is a positive sign, so let's have a look at the details. In the previous video, considering this possible intermediate cycle finishing relatively early at 131 days, we said that there was probably a 40% chance for that. So that was less than the most likely scenario. But the gold price on Friday does confirm that we are starting a new intermediate cycle, which has already been going on for only 19 days. Remember, usually these intermediate cycles on gold last for around half a year. Yes, sometimes these cycles can be pretty short, as over here at the beginning of 2021. And sometimes they can stretch for extremely long, as over here for most of 2022. Looks like the previous intermediate cycle lasted for 131 days. That's quite a bit shorter than usual. And within these intermediate cycles, we do have these daily cycles lasting for an average of around a couple of months. And the ongoing first daily cycle of this new intermediate cycle is also 19 days long. So even within the short-term corrections, within the short-term daily cycle, there's still probably some upside momentum in gold for another couple of weeks. Although within 1 or 2 days, there might be some correction down, perhaps down to $2,060 per ounce, would be a relatively good correction, which often happens after a monster rally. We see the same thing happening over here in the middle of October last year. Monster rally on Friday, Monday is red. Moving back to March last year, again a monster rally over a couple of days in the middle of March, followed by a bit of a retrace. Same thing again in November 2022, a relatively strong rally in early November, followed by a bit of a correction. So as I mentioned to the members at myfinanceteacher.org, back on Friday, we did convert from our holdings of GLD to having slightly more leverage versus gold price, including the miners, GDX. So a reminder here, for more timely updates, make sure to join us at myfinanceteacher.org. By the way, yesterday I posted a review of this outstandingly promising miner with support from a giant, perhaps the biggest metals producer in the world. Once precious metals are actually on a move to new sustainable all-time highs, these sort of juniors are going to explode to the upside. Here on YouTube though, I just want to share the view that after a bit of a correction on Monday, Mondays aren't usually that great for gold. It's probably not a bad idea to switch some of your allocation to, say, something like a GLD towards the miners. Perhaps GDX is a good option here. GDX in this cycle is likely to break this down trend line that has been in place all the way since mid-2022. Notice that during this time, while gold has generally stayed relatively close to its all-time high, especially in the last couple of intermediate cycle tops, GDX has actually failed to go anywhere close to its historic highs. And that is because the miners often underperform gold whenever gold is moving sideways or down. It's only when gold is strongly in a bull trend, that's when the miners are going to outperform significantly. And finally, if gold is lastly gonna bring us to sustainable new all-time highs, that will switch the market sentiment around, sloshing some of that capital out of the overvalued stock market and into precious metals, into these miners. GDX breaking above this downtrend line and testing the previous intermediate cycle top at 32 is probably too conservative for the target. Remember that miners outperform significantly when gold keeps making new all-time highs, so perhaps the target of testing early 2023 highs at around $36 on GDX is a bit more likely. Zooming in, looking at some of the technicals, you might see a bit of an inverse head and shoulders forming over here with a bit of a double bottom, and maybe over the next couple of weeks as gold declines down into the first daily cycle low, GDX might give us this right shoulder of this inverse head and shoulders. The height over here would be around $3.50, which gives us a measured target of testing that resistance zone from that previous intermediate cycle top around $32 to $33. But again, if gold manages to continuously create new all-time highs, attracting the generalist attention, sloshing some of that capital from the huge general stock markets into precious metals, GDX would easily blow past 32. And lastly, another commodity that is correlated with gold, but is far from its all-time highs is silver. Again, as I mentioned in many of my previous videos, often silver moves somewhat late within these intermediate cycles compared to gold, meaning that it's usually towards the top of gold's intermediate cycles when gold price is at significant highs. That's when generalist, less experienced traders are getting excited about precious metals and jumping into this more leveraged asset of silver versus gold. That's when silver produces these monster rallies closer to the top of the intermediate cycles on gold. Hence, if over the next several weeks gold does manage to give us sustainable new all-time highs again, after a while it's going to bring a lot of attention to this little guy silver as well, and testing those recent highs around 26 would again probably be a bit of too easy. Remember, constant new all-time highs on gold, sentiment in precious metals improving significantly. In that case, silver could probably test that next resistance zone from late 2020, early 2021 highs around $30. But again, let me remind you that all of these scenarios would require gold to make consistent new all-time highs for perhaps a couple of weeks. That is required for significant improvement in market sentiment in relation to precious metals. And talking about market sentiment, let's have a look at Optimism index for GDX. Yes, in one day on Friday, it has already jumped from under 40 to above 60. In fact, above 70, that's at 75.3. But GDX optics, as you see, is extremely volatile. So what I like to do is I like to look at the 10-day moving average of this optics. That's the solid green line at the lower half of your screen. And this 10-day moving average is still at 45.3. Usually a buying opportunity takes place when this 10-day moving average drops close to the level of 30. We've done that recently. And the local tops usually come with this 10-day moving average rather than optics itself, poking above 60, closer to the level of 70. And as we're only at 45 right now, there is still enough space to push higher. So yes, back on Friday, I did convert a modest 3% profit in GLD into miners, sitting ready to outperform. That is all for now. Have a marvelous Monday. Bye bye.